infrastructure bill was delayed, which is something that we talked about on the show, primarily because of the whole yield and stablecoin issue. We're going to be pulling up some more clips from Davos, listening to Elon Musk, Larry Fink from BlackRock, CZ, a plethora of people kind of talking about what we've been talking about on the show. And there's some clips that are going to absolutely blow your mind and are absolutely terrifying. And I'm going to be making a second video for you guys at 2 p.m. PT, kind of recapping it, because it's absolutely terrifying. And it does have to do with the CBDC. It has to do with tokenization, kind of everything that's happening. But more importantly, we're going to focus on that crypto market structure. And it makes sense that the bill was delayed. Anytime public servants get involved, or government and politicians, any of that, things continue to get delayed because there's a lot of red tape. There's a lot of the way American law is set up, there's checks and balances. And in addition to that, there's just a lot of steps that have to be done. And right now, when we're dealing with the crypto market structure, the big issue is yield. And that's something that I've been screaming about to you guys on the show this entire week, because again, yield with stablecoins is going to be important. They're going to be tokenizing everything. When we talk about tokenizing everything, it's not going to be decentralized tokenization. There's going to be two different types of tokenization that we're going to focus on today: centralized and decentralized. Decentralized is pretty much the current system right now, just as long as you're using a chain that there's no clawbacks, that there's no halting, any of that stuff. Okay. Something like Bitcoin. Once it's out there, it's out there. But the type of tokenization they're talking about, and the DTCC, tokenizing the stocks and bonds, equities, all that, it is centralized. Some of it's private, some of it is not private, and they can do what they want to do with it. And not only will they halt transactions, stop things, but they're also going to use it to essentially track what people are doing. And that's where the CBDC comes into it. Circle USDC and anything that has to do with stablecoins, is these are centralized cryptos. Okay. Stablecoins are centralized. And I understand that there needs to be some sort of centralization when we're talking about stablecoins, because again, it's monetary policy. But just to remind you, cash is a lot more private than a lot of these stable coins. And they essentially want to erase that system, move everything and tokenize everything, make everything digital. So not only is it easier, it lowers the cost because it's all instant, it's fast, but it allows for better surveillance because you can actually see what people are doing. And some of you might be like, oh, well, I just want to get it over with. I want the market to bump. We might not get another altcoin season. I hope that we will. What I'm hoping that's going to happen, I've been talking to a lot of people in the industry, a lot of my colleagues, but we're hoping is going to happen once we get the crypto market structure bill. It should be done in about a week not a week, in a couple months, which we'll get to that we're hoping to see builders really kind of come back to America and continue to build. And if we have that, and we have people that are actually able to create really, really dope ideas, then we can see some sort of altcoin season. Like right now, we do have a privacy narrative, which is great. We have AI, RWAs, DeFi, but right now it's still kind of in limbo because Samurai Wallet devs are sitting in jail. Roman Storm for Tornado Cash, she's still kind of dealing with it. And the reason why I bring those two stories up is because these developers, these coders, these guys that use code to improve the quality of life and provide some sort of privacy or whatever, they're currently in trouble. And the reason why they're in trouble is because they created code. And it's kind of terrifying for developers to have to look over their shoulder consistently, even though they've done everything correctly, like the Samurai Wallet devs, and then get in trouble later. So that's another reason why this crypto market structure bill is incredibly important. We need to get some sort of guidelines. And again, I'm a big believer that a bill or that no bill is better than bill, especially when your freedom is being infringed upon. And when we're not just talking about our freedom, we're talking about liberty. We're talking about our kids' future. We're talking about the current state of society because it's all changing. It's all going to be digital. It's all going to be watched. There's going to be people watching 24/7, 365, and that should terrify you. So let's go ahead and get into it. Welcome back to the O Show, everything crypto, every single day. I'm WendyO. Like this video, drop me a comment because we do our best to read them all. There's been a lot lately, and if you're a brand new subscriber, thank you so much for being here. And like this, watch it, subscribe, set alerts, do the entire thing. And if you're watching me on Rumble, hi, thank you for being here. Our numbers are doing pretty decent over there. Shout out to on X. You guys probably can't see me. For some reason, they stopped pushing streams, which is fine. But let's go ahead and give a shout out to our channel members. Shout out to Lawrence. Thank you so much. And I did not get great sleep last night. So hopefully tomorrow night. Shout out to Mike. Shout out to Mr. R, to John Legend, to Dale. Oh, thank you so much, John Legend, for putting the afternoon video. It was a really good one. It was an important one. To Gumby, to gorgeous Alexandra. Who else? Mr. Mixing, MJ Guzman, and Gumby again. All right, let's go ahead and get into it. All right. Let's go ahead and get into it. There's a lot to cover. And I've got my my egg bites today, because that's what we do on Thursdays. We do egg bites. People like ASMR, I guess. I don't know. All right. Sorry, I'm going all the way up here. Okay. So the crypto bill is delayed as Senate panel pivots to Trump housing push. Now remember, Trump put out an executive order, I believe, that basically is like, we are not going to allow we're not going to allow institutions or these equity for whatever to buy homes. Like, homes need to be for the American people. That's one of the reasons why we have the housing crisis in the U.S. There's a lot of issues. I could actually do a whole entire show as to why I think we have issues in America with housing, and that actually goes above and beyond just the institutions and all that kind of, like, the predatory behavior of BlackRock and stuff, them buying it up. A lot of it's entitlement too. I was reading a story. Well, I'm not going to get into it. No, I want to get in. I was reading a story about the younger generation and them wanting to live right next to amenities. And that's like a grocery store, the TJ Maxx, the Starbucks, all that type of stuff. So they want to be right there. They don't want to have to drive 10 minutes, 20 minutes. The first house I bought, not only was it in the hood, but I had to drive about 10 minutes to go to the grocery store. And that grocery store ended up not being safe. So I had to drive to an entire city, a different city, to get to a grocery store. So I had to drive like almost 20 minutes to go to the grocery store. And I hated it. I understand. But again, I needed to get into the house. I needed to get into a house. I needed to buy a house. And the way that you buy houses is you have to sacrifice. And I understand, like, the cost is so crazy expensive. A lot of that is because you have private equity that's buying up these homes. And there's no reason why they need to be buying up these homes. Homes should be for single family homes. They should be for any person, any American should be able to buy a home. They should. Like, obviously, like, if you make minimum wage, you're not gonna be able to buy a home, that type of stuff. But if if you're working and you got a decent job, you should be able to. It should be affordable. And it's not. And part of the reason why is you got private equity that's buying up these properties and they're sitting on it. I digress. But the crypto market structure bill. So sources told Bloomberg that the banking committee is likely to delay its bill to focus on Trump's housing affordability push. And again, in this current administration, Trump has kept most of his crypto promises, not all of them, most of them. And again, crypto is very important. Blockchain is very important. Tokenization is very important. But the most important thing really is affordability for Americans, because if Americans don't have access to money, if they don't have access to, sorry, my nose is running today. If they can't afford basic necessities, food, shelter, and energy, they're not going to be able to invest in things. They're not going to be able to really do anything to live, okay? So that's why the focus is going to be shifting a lot, and this makes total sense. I would actually rather them focus on housing affordability than crypto, even though this is my income. This is how I make money. So Trump administration is pushing housing affordability legislation to lower costs for Americans. This could delay push consideration into late February or March. Bill leans more on pro-crypto and Republican. Some controversial issues were left out. Yield, illicit finance, and ethics rules were mostly excluded and remain unresolved. The Senate agriculture bill is moving first. Both committee versions must eventually be merged for the final passage. And this is the crazy thing. They left out the most important issues: yield, illicit finance, and ethics rules. We're talking about yield is your ability to earn on stablecoins. And again, you should have the ability to earn on stablecoins. You should be able to decide from using a bank that pays you 5% on interest on your stablecoins, or one that's more risky and pays you 10%, or even 1 or 2%. This is how we not necessarily dismantle the current financial industry, but we make it better for consumers. The reason why things are so effed up in America is because a lot of people got lazy, and a lot of people are like, let's let the government do things for us. We trust them. You never should blindly trust anybody. Ever. I don't trust my daughter. If I say, baby, go do the dishes, I have to get up and I have to go in there and monitor her because I know she's not going to get up and do it. I don't trust anybody. Well, Wendy, that's a really scary way to live. No, it's not. It's life. If I don't even trust my own kid to do the dishes when I tell her to the first time, why would I trust some public servant that my taxpayer dollars are paying their salary? Which another thing is, how did Gavin Newsom get to Davos? And his speech was canceled yesterday, or whatever the hell he was supposed to do good. He shouldn't be there. There's a lot of problems in LA that need to get fixed. And I am really, again, I'm really very much anti-establishment for the most part. But when the amount of fraud that's being committed in California, and my taxpayer dollars are going to it, and the school down the street from my house is a 5 out of 10, that's problematic. So I hope they go in and they audit everything. They put it all in the blockchain for them, not for us. But I digress. But again, these key issues are incredibly important. Illicit finance, KYC, AML, and ethics rules. Also, too, protecting developers. Now, the next part is going to be on the Senate agriculture over here, which again, these are the funniest things. This is from Miss Ellie over here, from Miss Ellie. So, the Senate Agriculture Committee released an updated draft text for its version of the crypto market structure bill. Differences with Democrats remain. A markup hearing and vote is set for January 27th. Their version of the bill aims to expand the CFTC authority over crypto. The draft removes some prior bracketed sections. Key issues like DeFi stablecoins and joint SEC CFTC rulemakings are still unresolved. Again, it has to do with the yield, and it has to do with DeFi, because a lot of people don't know how they want to regulate DeFi. How do you regulate something that's decentralized? When I sat down with Hester Peirce, I was like, why can't these DeFi companies, because they build the front end, why can't they just put a disclosure, like disclaimers or disclosures, and have that, and people go on their way? I don't understand why they can't do that. But anyways, we are going to get crypto market structure, but it's going to take some time. So I would imagine Q1 or Q2 of 2026. And then as far as a little bit more on the Senate bill, this is from Mr. Bill Hughes. He's a lawyer at Consensus, but it was a really, really, really good take. Basically, TLDR, self-custody wallets that only store keys and sign transactions are not regulated. Non-custodial DeFi like DEX, UIs, aggregators, bridges, and dashboards are safe if they don't hold funds or control trades. That's incredibly important. So this right here will allow us to still operate in our true decentralized economy. They just will not be able to hold funds. And that's totally fine. That's fine. I love that. Absolutely love it. Happy. Very, very happy with that. Platforms that take custody, manage trades, or control routing, custodial, DeFi, CeFi, on-chain admin bridges must register with the CFTC and follow AML customer rules. I don't think that's a bad thing. I don't. Just as long as they're not holding your coins or they have access to your money, they shouldn't be regulated. I mean, they shouldn't need to. And the burden is going to be on the user. So if you're a dummy and you make a poor decision and you're not practicing good OPSEC, that's your fault. Oh, well. That's called accountability. That's called responsibility. That's called operating in a free market to where you have the ability to make as much money and ethically and legally as you can. And that is determined by how hard you work to study or how often you show up. And that's what America used to be, not what we're in now, where people get trophies for everything. And that's why crypto and Bitcoin is so empowering and so important, because it doesn't matter your personal background. It doesn't matter your social, where you come from socially. It matters what's up here. And you know what? If a bimbo on the internet like me can figure it out, you can too. Now, this is from, I'm not going to play this entire clip, but this is from Circle. So the Circle CEO calls it totally absurd to claim stablecoin rewards and claiming that stablecoins rewards would drain bank deposits and collapse credit markets. And this is important, because this is going to segue into our tokenization conversation. Circle has USDC. That's their stablecoin. They want people to get yield on stablecoins because they make money in that in that regard as well. In addition to that, I'm telling you, I've been calling it since like 2020. Circle USDC will be the CBDC of the world. And I'm going to get to that. You're just going to have to stick with me here. And I'm also going to do a little recap video, the second video at 2 p.m. PT, really kind of hitting hard on this because it's incredibly important that you understand what's happening. There's nothing you could do to stop it, but it's important to know what's happening. Make sure to smash the like and share this. Now, that's what he's talking about. Because, it impacts his bottom line. He also said issuers can't pay interest, but partners can offer rewards using their own revenue. Banks argue rewards could pull deposits away, but that fear is overblown. Rewards are common access across finance to help adoption, not financial instability. Stablecoins rewards are unlikely to drain credit or harm the real economy. And this is the thing. The bank is terrified because they don't want you to pull deposits. You want to know why they don't want you to pull deposits? Banks don't want you to pull deposits because if you pull your deposits, they don't have enough reserves to back it up. But crypto exchanges are required to show proof of reserves. Stablecoin issuers, this Tether and USDC, those stablecoins have to be back one-to-one. But a bank that you are supposed to blindly trust is not required by law to keep any reserves on hand. But you're forced to use them because you can't do anything in America without a debit card or without a credit card. 1 + 1 = 69. So that's what the banks are scared about. The banks are scared about that they have a really terrible business model and they've been taking advantage of you for Lord knows how long. And you're going to say, you know what? I'd rather use Kraken, or I'd rather use Coinbase, or I'd rather use XYZ because I can maybe earn $50 a year instead of $2 a year. And they might be able to take their kids to McDonald's or wherever the hell they want to because it's their money. So that's what banks are scared of, because banks want to operate in an elitist world. They don't want to operate in capitalism. Again, corporate capitalism is different than capitalism. Capitalism is needed for society. It is proven time and time again. And that's what they want to do. They want to take away your ability to have any type of control over your assets. And that's why Bitcoin matters. And, you know, since we're on this topic over here, where is it? Hold on. My nose. Oh, my nose. Since we're on this topic over here and we're talking about the predatory practices of the banks, thank you so much to Arculus for partnering with the O Show, everything crypto every single day. Arculus allows you to safely secure your crypto, to remove the predatory third parties so that you can own what is yours. And this is why we like cold storage. If you're interested in Arculus, we've got a code down below. You get 20% off. But also, they just announced that they have one integration with Yield XYZ, which unlocks staking for Ethereum, Solana, ADA, and Tron. The cool thing about this is you can safely secure your crypto, cold storage, and you get to stake. Yes, there are risks associated with staking, so make sure you understand about permanent loss and whatnot. But this is better than using a bank, because bank will pay you less than 1%, and you can simply stake in crypto, make a little bit more. And that's what the banks are scared of. It's exactly what they're scared of, and I don't blame them. I don't blame them in any way, shape, or form because it's impacting their bottom line. But anyways, a little bit more about Arculus. They've got the Arculus card and the Arculus app, which allows your assets to remain safe with advanced 3FA. They support over 10,000 cryptocurrencies across 27 chains, connect to DeFi platforms, swap, send, and trade with ease, and now stake with a little bit. Arculus users can now stake Ethereum, Solana, and ADA. Use code WENDY20 for 20% off. And if you guys are interested, the link's in the description and on my website. If not, no worries. But I thought that was a kind of a nice segue to talk about our partners over here, primarily because the banks are pissed. The banks are pressed, and they should be pressed. Now, this over here, this comes from Larry Fink, and we're gonna listen to this because it has to do with tokenization. Okay. This one is a little bit of a doozy here, a little bit of a doozy. So let's go ahead and listen to it.
I think the movement towards tokenization, decimalization is necessary. It's ironic that we see two emerging countries leading the world in decimalization, in the tokenization and digitization of their currency. That's Brazil and India. I think we need to move very rapidly to doing that. We would be reducing fees. We would do more democratization.
Reducing fees for who? For you. You'll still charge the same fee. You're still going to profit off of Americans. You run a business, it's going to impact your bottom line. You're not wrong here. It's going to lower fees for you.
By reducing more fees, if we had all investments on a tokenized platform, that you could move from a tokenized money market fund to equities and bonds and back and forth.
And you're talking about equities, bonds, and whatnot, money market fund. The accredited investor law is not modified. This is going to impact accredited investors, not retail. And that's something that a lot of people are not talking about. And it bothers me. Really, really, really bothers me. Because all this is in vain if retail doesn't get the same access as the big guys.
We have one common blockchain. We will, we can reduce corruption. So I would argue that
reduce corruption. So you're telling me if we have one common blockchain, and that's a key word he said, one common blockchain. This is at Davos. One common blockchain. What's one common blockchain? CBDC, digital ID. And then you got Elon Musk talking about robots, which we'll play in a little bit, so stick around for that. With the S word. They want to be able to track every single thing you do. They want to be able to track it in real time. And they want to be able to control who gets to use these special services. If you're money, you get access to special services. If you don't have money, you don't because you're too poor and stupid. But he talks about one chain. One chain. What do you think that means?
Yes, we have more dependencies on maybe one blockchain, which we could all talk about. But that being said, the activities are probably processed and more secure than ever.
That should absolutely terrify you. One chain. And this is that over here. Since I want to show my Ethereum bags, but BlackRock, $13 trillion BlackRock highlights Ethereum could be poised to benefit from tokenization with 65% of tokenized assets on the network in its 2026 thematic outlook. We talked about this the other day, but I'm bringing it up again. A lot of people will say Ethereum is dead. They don't want to deal with it. It's expensive. It's slow. There's problems with it. They're actually fixing the base layer, which we'll talk about that in a second. But in addition to that, BlackRock does not have a Solana ETF. It doesn't have an XRP ETF. It has a Bitcoin and it has an Ethereum ETF. Ethereum right now is BlackRock's chosen one. He is talking about other chains. He did mention it. But why do you think why do you think they have Ethereum ETF? Bitcoin's their digital gold and Ethereum is how they're going to unlock trillions, gazillions of dollars. And this is the only reason why I think Ethereum is going to go to $10,000. Also, tokenized assets could surpass 11 trillion by 2030, ARK Invest says. Apparently, tokenized assets, while sovereign debt dominates tokenization today, ARK expects bank deposits and global public equities to move a greater share of value on chain over the next 5 years. And again, this goes back to the banks not wanting to give yield. Remember, we listened to that clip from Eric Trump yesterday, and he was saying that one of the reasons why banks are closed and they don't do remittances after hours is because they want to sit on all that money, all that money that's piled up that's supposed to be sent after hours, and they collect a little bit of interest on it. So again, they not only charge you to send money back and forth, but they're also profiting off of it. And right here, tokenization, bank deposits. So the banks want to, everything's going to be tokenized. There's going to be ways to earn yield on it, but they don't want to pay the yield. So the banks are trying to set it up to where they don't pay yield. And again, it might only be $50 a year, $100 a year, whatever it is. But for some people, that is them being able to do something really dope with their kids or just treating themselves, buying themselves a damn coffee. We'll cover this on the next one today. We'll do a little bit of XRP for you guys. I know y'all like it. According to social data, XRP has fallen into extreme fear territory. Small retail traders have become pessimistic towards the number 5 crypto, blah, blah, blah. XRP is going to be fine. I'm not worried about it. Right now, people might be a little bit bearish, but I think that they're going to totally be fine. According to Finbold, XRP option volume soars over 200% in a day. So there's a little bit of interest over there. JPMorgan, though, is kind of contradicting what Larry Fink from BlackRock said. Apparently, their upgrade sparks activity spike, but JPMorgan's doubts it will last. And this is the Fusaka upgrade. They're basically saying over here, pressure from layer 2 networks and rival blockchains continue to cloud Ethereum's long-term growth. Yes and no. Yes and no. I think it's important to note that if Ethereum is a chosen one for tokenization, it will just be fine. And also Ethereum is also currently trying to fix their base layer instead of focusing on layer 2s right now. As far as crypto market goes, we saw a pretty gnarly drop yesterday. Coins are up, which is good. And as far as the trade, like the Bitcoin and whatnot goes, we haven't broken down below support. I'm not going to focus too much on price today. I'm going to come back on Sunday to really do a better analysis for you guys because there's nothing really going on. We're really just in range again. We broke up above range, above $95,000, and then dropped back down. EMAs are also indicating we're a little bit bearish, so we're probably going to tap on to about $86,000. Ethereum is holding on really well despite. And then XRP, even though they're talking about fear and greed, we're fine over here. Not really that big of a deal. Also, Kathy Wood makes a bold Bitcoin and NVIDIA prediction. She sees Bitcoin growing from 2 trillion to 16 trillion by 2030, implying price near 800,000 per Bitcoin, which is great. But I think more importantly, she warns that NVIDIA is rising AI competition means future gains may be slower and more earnings driven. That's important to note. And the reason why that's important to note, Bitcoin is great, fine, fantastic, but a lot of people are focusing on AI right now because they want to get ahead. So there's probably more money to be made in AI than there is in crypto right now. Next, I want to show this clip that my buddy's Altcoin Daily posted over here. I think it's important. Let's see what they say.
We're excited about AI, we're excited about digital assets, we're excited about innovation, we're excited about our people, and all of that is for serving our customers. And so you can feel that in the halls of the company today, and that's a fun thing.
Robin, we always appreciate talking to you.
Basically, BNY CEO is talking about AI and crypto, digital assets. That's what that is. So again, those are going to be the sectors to focus on. Also, Binance co-CEO Richard Tang sharing his crypto perspective at Davos. We'll play this and we'll listen to it. I'm more excited about CZ being there. This I like a lot better. I'm actually going to play this one to you. I like this one better. And I'm going to play it. I'm going to explain why.
But right now in the crypto space, there's really two proven industries, the exchanges and stablecoins. Those are large businesses. I'm really excited about three new more.
Exchanges and stablecoins.
I think tokenization is a huge one. I'm talking with probably a dozen governments about tokenizing some of.
This should terrify you, though. Tokenization is one of them, and I'm talking to dozens of governments about tokenization.
Their assets, because this way the government can actually realize the financial gains first, and use that to develop those industries, extractions, the trading markets, etc. Payments is something that we've tried, have not really conquered have not really started in crypto. We tried, but nobody really pays in crypto. But I think now we're seeing the convergence of traditional payment methods being behind the scenes, being supported by crypto. So the spenders swipe a card, crypto gets deducted from their account. The merchants gets US dollars or euros or whatever they get. So now when we have those bridges, I think payments is going to become pretty big. The third one is what you guys all mentioned is AI. The native currency for AI agent is going to be crypto.
Okay. A lot to unpack here. So he's talking about having everything on chain so that governments can effectively see things better, what's going on, which again, it's going to be transparent to the governments, but not transparent to us. That's a nanny state. We don't like that, but it's coming. Crypto payments. They're saying that that's a currency for AI agents. That checks out and that makes sense because AI agents can just do things. But one of the things I will say, and, kind of to go back to Mr. Richard Tang, he's a current co-CEO of Binance, which I like. We like Binance over here. Really, 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 really quickly. Where is it? Sorry. He basically said in his clip, he says, crypto hit a $4 trillion market cap last year, but the underlying foundation and on-chain momentum remain very strong. Binance milestones include 34 trillion in trading volume, 300 million users, and full global license via ADGM. Stablecoin market cap rose over 50%, transaction volume more than tripled, and regulatory Clarity Act, Genius Act is accelerating innovation adoption. He's 100% correct. He also says once the U.S. leads on regulation, global adoption of blockchain activity is likely to fall. 100% correct. One thing I will say is that I do know that people around the world, they do use Binance as like essentially their bank because there's so many people that are unbanked over there. But I really appreciate this talk from CZ even better. And the reason why I do is because I'm very old school. And I'm old school in the fact that he went away and he did time, not for doing anything bad to innocents. If you get my drift, you get my drift. Just like how Fetty Wap is out now and everybody's really excited because he just had some drugs charges and not doing anything bad to women or babies. So it's nice to see that CZ took the fall pretty much for the entire industry and he's out and he's over at Davos sitting with the elites. And one of the things I like about him the most is he is an underdog and he actually worked at McDonald's. He came from poverty. And those are the types of people I rock with. I like that. I'm not saying he's perfect. I don't say I agree with everything he does. I just think it's a cool story. It just shows you could be anything that you want to be in this world. Now, European stocks close higher after Trump's Greenland deal and tariffs retreat. Of course, Mr. Trump, with all kinds of stuff, okay? Apparently, the stocks and Bitcoin rose after Trump announced a Greenland framework deal. He also canceled planned tariffs on European countries. Autos and pharma stocks gained most. Gold hit fresh highs. This over here, hold on a second. And of course, he just out the side of his neck. This is pretty funny. I don't think he's allowed to say these types of things, but you know.
I mean, our stock market took the first dip yesterday because of Iceland. So Iceland's already cost us a lot of money. But that dip is peanuts compared to what it's gone up. And we have an unbelievable future in that stock. That stock market is going to be doubled. We're going to hit 50,000 and that stock market.
Yeah, he's not supposed to do that, but I digress. He also said that people are going to get $2,000 tariff stimulus checks without Congress approval. I don't know if he can do that or not. But another fresh reminder, stimulus checks are great because I know a lot of people are struggling, but stimulus checks, all they are, those are bribes given by public servants, basically saying, you paid your taxes, you're a good boy or girl, so here, take this and shut up. We're going to do what we're going to do. It's just a bribe. But again, people need it. And if that's what it's going to take to pump crypto, I rock with it. I'm here for it. That's what a stimulus check is. This should terrify you. We're going to listen to it. Elon Musk says he will start selling humanoid robots to the public by the end of the year. That's terrifying. But I want you to listen to this clip. This is incredibly important. And I got you. Hold on. Give me a minute.
With robotics and AI, this is really the path to abundance for all. If you say, people often talk about solving global poverty, or essentially how do we give everyone a very high standard of living. I think the only way to do this is AI and robotics, which doesn't mean that it is without its issues. I mean, we need to be very careful with AI. We need to be very careful with robotics.
You can't even manage your algorithm that's run on AI. And you want to give prosperity to everyone with AI and robotics.
We don't want to find ourselves in a James Cameron movie, Terminator.
And I like that he's in with Mr. Larry Fink, which makes it even better. We don't want to find ourselves in a Terminator movie, but that's exactly what's happening. Look what you're doing. You're talking to this guy over here about AI and robotics. This guy wants to tokenize everything. And have one blockchain, and you want to make the world better with AI and robots, and solve poverty and bring abundance.
He's great movies, love his movies, but we don't want to be in Terminator, obviously. But if you have ubiquitous AI that is essentially free or close to it, and ubiquitous robotics,
who's going to pay for the AI and who's going to pay for the robots? As a taxpayer, I don't want to.
Then you will have an explosion in the global economy, an expansion in the global economy that is truly beyond all precedent. Yeah,
so I'm going to leave you guys with this. We talked about Mr. Larry from BlackRock, tokenize everything, surveillance, nanny state, tokenize it all, with one chain. And then we're going to use AI and robotics to bring prosperity to everybody. But capitalism is bad, right? So I want you to listen. I'm going to do another video on this, a short one. I want you guys to watch it. And there's nothing we can do to stop it. It is what it is. But yeah, pretty interesting stuff. Pretty interesting stuff coming out of Davos from the elites. Sending y'all love and light. Make sure to smash a like, and I will catch you at 2 p.m. PT and 6 p.m. PT. And then tomorrow, I'm going to be streaming early tomorrow. My baby's got the day off. And we got to do our nails. We got to do Girls' Day. It's good. Pamper yourself. Sending y'all love and light. Bye, babies.